What's up, guys? It's Nick here, back with another dividend income video. So in the month of November, I received 17 paychecks for passive income. And as you can see, my portfolio finally hit $50,000. Guys, with that being said, let's get right into the video. So to start off the month, I received $7.64 from General Mills and $15.24 from Verizon. This put me at $22.88 to start the month. As we can see with General Mills, I have a little over $1,200 and I have 14.14 shares at an average share price of $58.64. And if I put this at year to date, General Mills has actually performed very well for me this year, up 32.32% with market gain and dividends. So that is pretty awesome. And then on the flip side, we have Verizon. I have just under $900. That market gain is negative 333 with a loss of 22.97%. So the complete opposite of General Mills. However, I do have 23.35 shares at an average share price of $58.06. And when you look at Verizon, they do have a high dividend yield of 6.71%. And then let's go into the next one. On November 4th, I received $38.15 from JEPY, which is the highest I've ever earned from JEPY. So that was pretty awesome. That actually jumps my dividend income to $61.03. And then while we're at it, let's just go November 9th to MasterCard. I received 87 cents, and that puts me at a total of $61.90. So if we go to JEPY, I have a little over $3,500. I have a market loss of only 0.16%, which is really good. As you can see, I've earned so many dividends this year that it's almost break even with the loss in capital appreciation. However, with that also being said, JEPY has vastly outperformed the S&P 500 this year, which is pretty cool. So I have 62.92 shares for an average share price of $59.18. And right now, JEPY has a dividend yield of 11.13%. However, when you subtract that expense ratio, you're going to get around 10.8%, maybe 10.78%, which is still a very good dividend yield for a covered call ETF that hasn't decreased their income like my other stocks I've owned before. And then I actually sold MasterCard, and just basically the reason is I just want to get out of all finance stocks. So that's why I sold MasterCard. And then next up on November 10th, I received 3 dividends, $1.37 from Apple, $4.80 from Clorox, and $2.41 from Costco. This puts me at $70.48, and we're only a third of the way through the month. So Apple, I have just under $900. I was about to freak out with that return, 85%. But if we go to year to date, which I love this feature that M1 Finance finally put on, I'm down 17.53%. Honestly, tech's not doing very well this year. I'm fine with that. I'm going to still hold Apple, still a great company. I have 6.06 shares, an average share price of $101.61. However, Apple's yield is very low right now, 0.61%. But I still think it's a great company to own, so I'm going to keep it. Next up, we have Clorox, just over $600 with a year-to-date return of minus 9.41% when you count the dividends. Could be a lot worse. Clorox did horrible last year. However, this is another company where I see it as an essential business, cleaning supplies. So I'm going to keep Clorox. And I have 4.15 shares, an average share price of $168.01. And Clorox does have a great dividend yield, 3.12%. That is solid. Next, we have Costco just over $1,300. I'm down about 10%, a little over 10% for the year with the dividends included. But once again, Costco is one of those companies that I'm going to hold hopefully for forever. It's a great company, 2.68 shares, average share price of $401.02. Another really low dividend, 0.69%, but Costco makes up for that with their high dividend growth rate. So on November 15th, I received an insane amount of dividends, 7 different paychecks on one day, starting off with $16.42 from ABBV, $3.57 from Colgate, $3.34 from Hormel Foods, $5.73 from Procter & Gamble, $6.54 from Realty Income, $5.32 from Stag, and then $8.74 from Texas Instruments. Guys, this is halfway through the month, and I'm already at $120.14. So it's always nice to hit $100 when you're only halfway through the month. Let's go through these stocks. AbbVie, I have just under $2,000. I have a year-to-date return of 25.61% with the dividends included. I have 11.64 shares at an average price of $93.70. And just looking at AbbVie's dividend yield, it's 3.45%. They usually increase their dividend by about 10% every year. So that's a great starting yield with great dividend growth. Next up, we have Colgate, just under $600, down a little over 5%. That's pretty good with the dividends included. I have 7.6 shares, average share price of $75.10, and they do have a decent yield, 2.39%. Of course, Colgate, they sell toothbrushes, toothpaste, anything that has to do with dental. It's a solid company that will be in business for a long time, and that's why I hold it. Next up, we have Hormel Foods, just under $1,000, and a loss of 1.81%, not bad. Then I have 19.99 shares at an average share price of $47.53, and they do have a lower dividend at 2.18%. However, Hormel is a company that also increases their dividend by a large amount every year, around that 10%. And of course, it's a food company. I love those because you got to eat. Most people eat 3 times a day at least. So that's why I'm going to hold on to this company. Next up, Procter & Gamble, just under $1,000 as well, a loss of 4.43%. However, Procter & Gamble, one of the strongest companies I own, just because of how many brands they own that are the top of their industry. And I have 6.36 shares at an average share price of $132.56. Pretty good dividend yield, 2.42%, and great dividend growth. So basically what I was saying earlier, they have a lot of top brands, like I want to say Tide, Pampers, stuff like that, that people have to buy and will continue to buy. So this is one of my stocks that I see as a great investment for recessions. Next up is Realty Income, about $1,658, down about 8%, still looking pretty good. 26.37 shares at an average price of $62.78. Their dividend's actually looking pretty good right now, 4.7%. That's when it starts getting to this point, I'd say Realty Income is definitely a buy, especially if it gets closer to 5%, then it's a definite buy. So next up is Stag, about $1,444. Actually pretty insane to see that it's down so much, 27.2%. However, this is another monthly dividend REIT that I love to own, so I'm going to keep it. 43.69 shares, average share price of $31.35. And this one also has a pretty good yield, 4.41%. When I see Stag and O start to get closer to that 5%, that's the time that I really want to start throwing money at these stocks. And then last up on the 15th is Texas Instruments, just under $1,300. And I'm actually surprised to see that return 1.59%. That's all I'm down. This is a tech company. Normally this year, tech companies have been destroyed, but Texas Instruments, they're just in a class of their own. I would say this is probably one of my favorite tech companies, and I might actually put them over Microsoft because they have that strong starting dividend yield, 2.64%, and they also have great growth. Now, this year they did increase their dividend by 7.8%, when usually they do double that, almost 2.5 times that. So hopefully in the future they can get back to those 18, 19% dividend growth rates. So I have 7.09 shares at an average share price of $161.96. And then next up, I received 3 dividends on the 30th, $25.01 from BST, $21.75 from Good, and then $7.68 from LTC. Now, if we start with BST, I have $3,200. Since I bought it, it's done nothing but go down, and I'm down 7.91%. However, the $25.01 that I get every single month definitely helps to cover those losses. And I have just over 100 shares at an average price of $35.63 with a strong dividend yield of 9.12%. So this is a stock that I'm really looking forward to in the future once the economy gets better. I think tech stocks will do well going this decade. And then this stock also provides great dividend growth and qualified dividend income. So that's why I'm holding it. Next up is Gladstone Commercial Corp, or Good. I have just under $3,300, and they're actually down 21.25%. Whereas last year and during the pandemic, this is a stock that performed very well. And I do earn quite a lot of income and dividends from this as well. I have 173.46 shares, average price of $18.45. They do have a great dividend yield, and I actually bought this company when their dividend yield was around 14%. And this is a company I would say they receive their rental paychecks at about the same percentage as Realty Income Corp, maybe even a little bit higher. It's been a while since I've checked though. And last up, I have LTC Properties, just over $1,600. And I'm actually shocked to see that I'm up almost 20% on this stock, because for the longest time that I've held it, it's been down. But I mean, like I said, I'm just shocked to see that I'm up this year on this stock. And I have 40.40 shares and an average share price of $36.23. And their dividend yield is pretty good too, 5.74% for a monthly payer. That is great. It's actually want to see the all-time. Wow. Like I said, even on the all-time, I'm up on this stock, which is crazy because I remember this stock was down in the red for almost the majority of the time I've held it, and I've owned it since December 9th of 2019. So really amazing to see that LTC is in the green. Now moving forward, going to my dividend growth chart. So for the month of November, I earned $174.58. Now, if that was all the income I earned for the year, for the month, I would have made $1.09 an hour. When you take that and you divide it by 160 for 160 hours in the month. And then if we look at this 10.46%, That is taking my dividend income and dividing it by my expenses for the month of November. So my dividends could have paid for 10.46%, which that is amazing. Anytime my dividends could pay for over 10% of my expenses, I think I'm doing great. And as you can see, for the year, I have $2,100 earned in dividend income. And for this number here in the yellow is taking all 12 months, taking my income right here, dividing it by 12 months. And as you can see, I have $175.49. And then this number right here, the 190, is taking the first 11 months of the year, taking all of my dividend income from the 11 months of the year and dividing it. And so my average dividend income is $190.97 up to the end of November. And then this number right here is just taking this number and dividing it by my dividend income in 2022. So my income has grown 48%, and we still have 1 month to go. The month of December, I'm expecting over $200. I'm hoping it gets close to 238, but I could see a new record depending on how much of a dividend I get from SCHD.